Hey guys, just wanted to throw out a quick video here on Tesla and the recent post I had done and just some of my thoughts in regard to price action. I know it looks kind of scary from the post. I wanted to clarify exactly what I was saying and what my beliefs are. So, if you haven't watched the earnings call, I thought it was good long term for the company and for the stock. I think it resets expectations very clearly. Inside of it, they made it very clear that we're not going to get to 50% CAGR probably in 2024 or maybe 2025. Dojo is a long shot. Um, they indicated that one of their big fears, I think, and Elon's articulated this before, but the threat of an economic slowdown, and I'm frankly on the fence on that. I think that this could be a soft landing. I'm probably leaning that way. There's just so many positives that I'm not going to go into this video. I've got other videos that talk about that, but I think they might be overestimating how bad things are going to be, and I think some of that could change the beginning of this, you know, end of Q1, maybe in March, if we get rate cuts when the BTFP closes and the Fed starts pushing people towards the discount window. I think if they also, cut back on quantitative tightening with the stealth QE that we have, I just think that there's some stuff maybe that Elon isn't paying attention to because, well, he's got other things going on. And to be clear, I love this company, and Elon Musk is like a hero of mine. I'm not saying these things. I'm not saying them because I want to make some money off of a drop. I'm not shorting the stock in any way. I did exit my position fully, pretty much. There might be like some dust sitting around for compared to what I have in my portfolio. Definitely less than 1% of my portfolio if there's anything left in Tesla stock. But I'm making this because of my fears on what could happen to the price action and what I believe we could see from mainstream media pushing really hard over the next month or two. And when that happens, I mean, you got to think about retail. You're retail probably too if you're watching this. It's been brutal. It's been brutal since, end of 2021, beginning of 2022, over 2 years now of just pain and suffering, especially the people that, didn't understand PE ratios or bought the top when it was over 1,400 on the PE. They're hurting. They've had a lot of opportunity cost, and all that is just, they could have been invested in Meta. They could have invested in so many other things and made a bunch of money. Um, all the other big caps, the Magnificent Seven, which now Kramer's calling the six, they're doing well, hitting new all-time highs. They're doing really well, and Tesla is obviously not in that list right now, and it might not be for a couple more months, quarters, worst case, maybe a year. This video is about preparing people for that. It's about understanding that that could happen, and it's about showing you some of the price targets that might occur if that does in fact happen. So I want to cover some of the good stuff, just real quick highlights. There's a lot of great stuff in this report. I'm not going to go through all of it. My friend Tom Nash actually just posted a tweet, or I'm sorry, a post in X a little bit ago that covered some of it, and they were all good points. I mean, he's spot on. COGS are lowering significantly. I mean, when you look at, if you know anything about manufacturing, these were great. The long-term vision of this company is solid as ever. They're resetting expectations. I said that a little bit ago. Huge cash position. And I think that what they'll be able to do, since all the other legacy automakers are really just suffering, they're slowing down. There is in the West, like Europe, the United States, there is no competition to Tesla. BYD will not make it. BYD is in some of these, they're entering some of the European markets, but there's quality issues. I could see in the future tariffs being put on because like Germany doesn't want to get crushed by China and foreign EVs that are being heavily subsidized by their government. So I could see a lot of headwinds for BYD in the future trying to go into other markets. I don't see these for Tesla. They're getting more diversified. They do have China related risk. I mean, 35% of their production is coming from Shanghai. That is a concern. Again, they could do foreign exports if demand slows in China. And I don't think China's economy is doing well. I think them getting rid of shorting is a sign of a very, very, very bad economy and one where they're just trying to prop up their markets from complete collapse. So I'm not optimistic there, but and then I don't love the fact that maybe there could be tariffs and other things coming from these other countries that start to hurt Tesla's ability to export from Shanghai. But again, it's only a third of their capacity right now, and Tesla, I think, is focused on doing the right stuff. They're focused on their long-term vision. What better time to focus on your long-term vision right now, regardless of the stock price? The stock price doesn't matter. They don't need to raise money. The stock price might matter for people that are holding the stock and that have wanted to make money off of Tesla. And I'm sorry if you bought at the top or just at a much higher level than what it is today. But for this company, this shouldn't be their primary focus. Their primary focus should be on their long-term vision, on getting the sub $25,000 car, on building out the Cybertruck, on lowering COGS, on all the things that really, really matter that so many other YouTubers already cover. So I'm not going to go into that. We're going to focus on the chart and some of the levels that I believe we could get to. And let's see if I can get this. I guess that's as big as she's going to get. So sorry about that. I did want to cover real quickly a couple things, though. I talked about the PE. So the PE was at, it doesn't show it here, but it was at over 1,400 at one point, which is a huge number for the peak. We got down to as low as the 30s when we dropped towards $100. I was a heavy buyer in that range. I bought Leaps. I made 350, 400% off of Tesla Leaps, which is basically an option that's out over a year. If you don't know options, start them slowly. Also, I wanted to say this is not financial advice. I am not a financial advisor. I'm going to throw out my first disclaimer on my video here. I am a high school dropout who just happened to get rich off of investing and was able to retire about 4 years ago. And I'm a multimillionaire now. So I do know something about investing. I didn't know anything about finishing school, and I didn't like work. I didn't like working for other people. So I do this now. And I'm just recently become a YouTuber. This is a fun new hobby for me. I started a week and a half ago, and I love it. So I'm probably going to keep doing it. But anyway, I digress. My point. So we were in the 30s, and we got up to the 80s, almost to the 90s for the PE ratio. I could see this coming back down to the 30s again, just off this news. The stock already is down like 10.5% today. I sold out -8 today. I had bought into earnings being hopeful, but again, I think long-term vision, I'm more optimistic than ever. I didn't even mention it. FSD 12. That's going to be amazing. 98% of the code is being removed with FSD 12. That's phenomenal. I don't think the world understands what all that means. This Tesla is the most impactful AI company in the world in the next couple of years. If people don't realize that, they're right at the top of the list. I believe the leaders. I don't think that Elon jests when he says that. I think it's very, very true. And I think people are going to start to understand it. But again, you can't bank on FSD just taking off and changing people's minds. We've been hearing that message for years, over 3, 4. I don't remember anymore. It's been so long. But again, I think we're getting close. We're getting close. It's going to happen. I have faith. I know it is, because I can see what this company and what this man does. And I hope you do too. This video isn't about getting you scared. It might seem like that with the title. It's about making sure that you understand where we're at, what the risks are, and what the long-term vision is, and that there might be better opportunities in other parts of the market. And that's probably what retail is going to think. So you need to realize that we can drop, even if you still have faith. Realize that we can drop and be prepared to buy on any lows that come up. That's really what this video is about. I remember what it was like when we were down near 100. Nobody was with me. I mean, I can't say nobody, but like almost nobody. There were YouTubers that were still like pushing. They weren't like big TA guys or chartists. I think Chicken Genius, he was right about the drop, and then I don't think he capitalized on it though. I don't think he was a buyer when I was. So I don't even know if he hit the bottom well. I think eventually he got back in. I don't know. I know he's big on Rivian right now. I still think that that's a risk, but again, no, I was pretty much alone. I was screaming from the rooftops with nobody around that they should be buying when we got near 100, and I was alone. And there was a lot of people that said that they would be there with me and they'd be buying, and they were not there. And I don't want you to not be there. I want you to understand. I want you to focus on the long-term vision. I want you to understand what downside is in front of us and be prepared enough for that so that you can capitalize on as close to the bottom as possible, or at least in a better entry than we have right now, or just stay with it in DCA. That is okay. That is a perfectly legitimate form of investing that maybe 90% of you should be doing, is just buying more. But you have to have the mental fortitude to do it. And that's what I'm going to try and tell you today. Hopefully, I've explained why you should be strong in your mind, and I'm preparing you right now for what could come. So here we go. Before I go too far down the rabbit hole here, here's the chart. So again, some of these look pretty scary. The first point that I wanted to make, the first one, that fib level, we broke through the green. We're under the 50. That's this purple line over here. That also coincides with what the 200, this is the monthly chart, that coincides with what the 200 weekly moving average, which is bad. It basically indicates that you're in a bear market for that particular investment, in this case, Tesla stock. So you don't like that. And we tried to test up, and this earnings just butchered it. I mean, it's not, we're not going to see positive narratives. I can see it already. I can see mainstream media saying stuff like, it's clear now that there's no EV demand and that Tesla is very overvalued and people have been paying a premium and that that's going to disappear now, and that and then they won't focus on the fact that this is the entire auto sector that's getting crushed right now. They won't focus on the fact that it's because of high rates that they're having these problems. None of that stuff will come up. It'll just be shit on Tesla. So anyway, so that's why I think the likelihood of going down to the next fib, that's this dot 618. It's called the golden retracement zone. This is normally the place you bounce. Could it be a bounce here? Maybe. I don't think so though, just because there's a rule about gaps and daily price action in charts, and that 90% of them get filled. They don't get filled at the extremes all the time. So it's possible that maybe we stop at the dot 618 near like the 170 range, and then we could potentially turn that into support. I think it'll be temporary personally, though. I think the chance of us getting down to like the 147 range where this daily gap is, I can't display it here because I'm on the monthly chart, but believe me, it's there and it's a decent size. I think the chance of hitting that is, I in my post, I said 70%. I think that's pretty accurate. I think 70% is pretty accurate. I actually think that maybe there's an 80 to 85% chance that we end up kind of hitting / stopping at this next point here, which is the 100 moving average on the monthly time frame. If you look way back over here, you'll see that this acted as support a long time ago. So this could be the bottom. I know people like Chicken Genius are saying down to 60, 65, way down here, a 63% drop from where we're at, or maybe 62, since we've dropped a little bit since I've made this. I don't think that that's the most likely bottom. I think that's maybe a 10 to 15% chance. I think the most likely bottom is this 100 monthly moving average, but you have to be prepared to buy under this. Basically, anywhere from 115 to 65, you should be heavy DCAing into this stock, in my opinion, as someone who is not a financial advisor. So I just think there's so much opportunity here, guys. Follow me for this ride. Like and subscribe. Hit the notification bell. I'll be here to support you guys. I'll be here to tell you why you should be buying all the way down. Okay. I will be that person for you. I promise. And I won't abandon you guys. And I will be a buyer. I will be a buyer of last resort for this stock when nobody else is, or very few. I'll be right there with you. So again, just focus on the long-term picture. Tesla's focusing on the long-term picture. Help them do that. Love you guys. Hope this was beneficial to you. I'll talk to you later.